We are a proof of stake Bitcoin layer 2. So you stake your Bitcoin and you accrue gas fees. And so the more you stake your Bitcoin, the more gas fees and the more Bitcoin yield you can have. There's actually this joke within the Bitcoin maxi world, where does the yield come from? And there was never a really clean answer. We at Botanix, it's absolutely very clear where the yield comes from. 50% of all the gas fees, of transaction fees, go to what we call STBTC. It's our Bitcoin yield product. So you now have cold, hard Bitcoin yield, purely backed by economic activity on Botanix. So I think this is the initial stages of what we believe is a global, permissionless, transparent, open financial system with Bitcoin.
Hi, everyone. Welcome to Fully Diluted. I'm your host, Dylan Bane, along with Sam Ruskin. Today, we're joined by Botanix, a Bitcoin L2 powering the BitcoinFi ecosystem. Without further ado, I'll introduce our guests, Willem and Alisia, co-founders of Botanix. Yeah, and just to start off, it'd be great if you could give a quick intro about yourself and how you guys got started with Botanix.
Yeah, sounds good. I can kick it off. So I'm Willem, grew up in Belgium, became national champion in mathematics there, studied electrical engineering, researched in cryptography, then ended up moving to Saudi Arabia. So lived there for a few years and became a Bitcoiner. Saw hyperinflation happening, saw people get their bank accounts seized, and very, very strongly started to believe in Bitcoin and wanted to move Bitcoin as fast as possible to global money. Then went to Harvard Business School, and that's where I founded Botanix about 3 years ago on a singular vision to make a Bitcoin global money. I think what was missing was a second layer that could bring programmability to Bitcoin, that could actually build a new financial system with the same values as Bitcoin and bring that to the world.
Awesome. Thanks, Willem. So I'll introduce myself quickly. So my name is Alisia, the other founder of Botanix. I'm originally Canadian, so did all of my schooling there. Worked and lived in a lot of emerging markets in my early corporate career. And that's actually where I saw a lot of these early pain points of broken finance and broken money. And actually living in Brazil in 2015, that's when I actually fell down the Bitcoin rabbit hole for the first time. And when I purchased Bitcoin for the first time, actually with cash back in the day. So actually it's my 10-year Bitcoin anniversary this November. And once that really unlocked for me, I just saw Bitcoin as being basically the solution for a lot of issues that I'd seen through all of my travels and work experiences. So got fairly involved within the Bitcoin community, spent a few years in EVM land, and I'm very excited to be back building in Bitcoin. And actually, Willem approached me with the idea for Botanix about 2.5 years ago now. So I also went to HBS, and that's how we originally met. And very much still the same vision, which is what Willem just echoed, that Bitcoin has proved itself as the best money in the world. Now it's time to actually put it to work and move it beyond a store of value. And that's what really motivates us at the end of the day, building this world on Bitcoin and really having it transcend store of value and becoming an asset and becoming money. So we're happy to dig into that a little bit more today.
For sure. So yeah, I think we can all agree that Bitcoin has achieved PMF. It's a store of value. I think a lot of listeners have heard about the Bitcoin L2 ecosystem for probably over half a decade now. I think we've yet to see, very significant progress in terms of adoption. It'd be very helpful if you could just outline where are we at right now in terms of building Bitcoin L2s, being able to build applications on Bitcoin, and where's the ecosystem at? That's directed to either of you.
Yeah, no, sounds good. I mean, I can go more specific into Botanix. Bitcoin is scaling. There's a bunch of different solutions, all following different paths. I think what separates us is a very strong long-term vision. So we try to think 30 years ahead. How is this financial system? How is this world going to run on Bitcoin? We've seen the Lightning Network for payments gaining adoption year over year. You can send fast free payments, but what about the rest of the financial system? And so we strongly believe 30 years from now, all companies, all governments in the world, every person will participate in this new financial system. We're actually now, I believe, on crossroads where Bitcoin has proven itself as store of value. The next is medium of exchange. There's two paths this can follow. One is Bitcoin just becomes a gold in the traditional financial system on the balance sheet of treasury companies being financialized in a traditional financial system, or you go down the road where you go on-chain, permissionless, global, transparent, where anyone in the world can verify. And that's the world we believe in, and that's the world I think I want to live in, where the financial system, it's outside of the hands of governments and everyone in the world is able to participate. And that's also what we've been building with that goal. I think where we are today is you can build applications. Look at Botanix. We've got a bunch of applications that have proven product market fit, like GMX, Chainlink. They are there on Ethereum, on Arbitrum, on a bunch of applications, but they use typical wrappers that you can use, centralized wrappers that you can then use. They're not built on Bitcoin. And that's what I think is the game changer. That is what eventually the world is going to head to. It's very initial phases, but the economy is starting to get proven, and you see those initial signs. One of the things we believe that is missing, or that is kickstarting it, is what we believe is Bitcoin yield. So Bitcoin yield, in essence, purely shows you the economic activity or demand for paying in Bitcoin. Like, the only difference between a Botanix, for example, and an Arbitrum is that you pay your gas fees in Bitcoin. And I mean from a user perspective, right? From a user perspective, if I trade on Arbitrum on GMX or I trade on Botanix on GMX, what's the difference is that you pay your gas fees either in Ethereum or you pay them in Bitcoin. Right? And why would anyone do that, in essence, right? Okay, you have the ideological reason. A lot of Bitcoiners would want to see Bitcoin, would want to pay in Bitcoin, but that does not drive sufficient demand. What is the game changer is that if you pay your gas fees in Bitcoin, you basically are generating Bitcoin yield, because those gas fees, similar to like Ethereum, eventually should secure the network, should secure the financial system. And so also on Botanix, we are a proof of stake Bitcoin layer 2. So you stake your Bitcoin and you accrue gas fees. And so the more you stake your Bitcoin, the more gas fees and the more Bitcoin yield you can have. There's actually this joke within the Bitcoin maxi world: where does the yield come from? And there was never a really clean answer. We at Botanix, it's absolutely very clear where the yield comes from. 50% of all the gas fees, of transaction fees, go to what we call STBTC. It's our Bitcoin yield product. So you now have cold, hard Bitcoin yield, purely backed by economic activity on Botanix. So I think this is the initial stages of what we believe is a global, permissionless, transparent, open financial system with Bitcoin.
And just to complement Willem there on the Bitcoin yield product, the big unlock for us was actually interviewing users and interviewing Bitcoiners and asking them what their pain points were. And of course, all of them want to be able to earn some yield on Bitcoin, and they want to be able to collateralize Bitcoin or use it as a pristine collateral asset within a financial ecosystem. And so Willem described a little bit about STBTC, which is staked Bitcoin, which is the Bitcoin yield product. And what's really unique is that we really tried to make it as simple as humanly possible for anyone to stake their Bitcoin. So when you bridge your Bitcoin from Bitcoin L1 to Botanix L2, you can stake directly and you're immediately accruing yield from network activity in Bitcoin on Bitcoin. So not affiliated with a token, not affiliated with points, purely Bitcoin in, Bitcoin out, and backed by real economic activity. And that we found was quite the game changer, because that's exactly what the people want, right? They want this in Bitcoin without any lockups or any sort of inflation. It's a very simple, straightforward product. And we thought that this would actually bring Bitcoiners on chain and people who've never been on chain before to start, bringing their Bitcoin on chain and using it as a base asset within a decentralized Bitcoin finance ecosystem.
Yeah, I think you make a great point that maybe the majority of people who hold Bitcoin aren't actually on the Bitcoin chain. Could you walk us through how exactly do you bridge to the Botanix L2 from Bitcoin? Does it resemble, similar processes on an EVM chain? Just what's the general process and flow of that?
Yeah, it's similar, and it's also not similar in the essence that we are a Bitcoin layer 2. We follow a different security model. But in essence, you have your Bitcoin or on Coinbase or on Ledger, wherever you have it. You can then go to the Botanix bridge and bridge that to Botanix itself. Now you have your Bitcoin on Botanix. That's still in your own wallet. You can use it in your Fireblocks wallet or your Safe wallet. And from then onwards, you can use that like on any EVM chain. It's very similar process. You can start using it in perp DEXs, start trading on it, staking it for the Bitcoin yield. But in essence, you can immediately withdraw back to Bitcoin instantly. So a lot of the optimistic rollups you've seen, they have a 7-day withdrawal. For us, it's instant in. It takes actually 3 hours to peg in, and it's instant peg out. So that's very interesting, a little bit different than on Ethereum, but we're only connected to Bitcoin in essence. So it's a similar bridging flow, albeit a little bit different.
And just to complement that a little bit further, I think the net new innovation is Willem's invention, which is the Spiderchain, which he can fill you in on, I'm sure. But our thesis to Bitcoin scaling is a little bit different than everything you're seeing out there. So there's a lot of folks experimenting with optimistic rollups, with BitVM bridges. Our approach is the Spiderchain, which really optimizes for decentralization. So our core thesis is that at the end of the day, the most important principle or tenet for Bitcoin is decentralization. And that's what we've optimized for throughout our full design. So actually, we started with federated proof of authority model. So we started mainnet about 2 months ago with a federation of 16 node members, of which Botanix is only running one of the 16. Trust me, it is a huge coordination challenge working with 16 different entities. But to be honest, that's the beauty of decentralization, and that's what makes it great. So we actually handed over all operational control on day one to the federation. And our plan is to expand that federation. So we hope to go to about 100 nodes, which is a dynafed, which enables more permissionless entry or exit within about a year. And in about 2.5 or 3 years from now, we want to hit the full Spiderchain, which is over 1,000 nodes, which we consider to be close to permissionlessness. But maybe Willem can tell you a little bit more about the technical architecture of the Spiderchain, which is what really differentiates us.
Yeah, absolutely. Happy to go deeper into the Spiderchain. In essence, I think if you look from a technology perspective, Ethereum layer 2s and Bitcoin layer 2s are wildly different. They cannot compare at all. In essence, you can do DeFi, the financial system, you can run that on Ethereum itself. And so censorship resistance for Ethereum layer 2s is way less important because you can have a financial system with censorship resistance on Ethereum mainnet. On Bitcoin, you can't. Bitcoin on the base layer is only money. What Botanix is the potential for a global financial system. The most important aspect there is that it's censorship resistant. You don't want anyone in control. Actually, you want that financial system to share the same values as Bitcoin. And so the most important aspect that we went for is decentralization. And so we went for full-blown decentralization. What we have right now, 60 node operators, but it's basically in place to go to 100, to 1,000, to 10,000. What we don't have is the economic incentives fully there yet to run 10,000s of nodes. But a dynafed is fully possible, and it's actually going to be faster than what Alisia mentioned here. I think we're looking at January, February of 2026 is when we can go to 100 node operators. And so you can keep expanding beyond that. And so in terms of security model, this is different. We go for a decentralization and censorship resistant approach in essence.
And why the censorship resistance is so important is, again, when you speak to Bitcoiners, when you speak to users, right, they ask you two things. They say, what do I do with my Bitcoin and how do you keep it safe? Right? And so what do you do with your Bitcoin? That's basically our entire ecosystem of products that are built upon this liquid yield-bearing Bitcoin standard, which Willem just described, which is STBTC, which inherently will accrue yield over time and serve as the base collateral asset for the full DeFi ecosystem within Botanix. And number two, how do you keep it safe? A lot of Bitcoiners have been burned by the BlockFis and the Celsiuses of this world. They're terrified of bridges with a single signer or a single operator. So the number one thing that they care about is, can any singular party take control over your funds? And we have a very clear answer to that, which is no, they cannot. And that is the beauty of the initial federation, the dynafed, and the Spiderchain. And so that is how we address those specific user concerns.
So on the topic of Spiderchain, which I think is like a super interesting alternative to BitVM, I know that like BitVM is a super interesting product. People have their own concerns about that and like the operators of the bridge. But as far as Spiderchain goes, how do you guys plan to build those economic incentives and incentivize like validator growth and or decentralization?
Well, there's two ways. Today on Bitcoin, if you run a full node, there's no direct incentives except that you have full control over your and transparency over what you see in the network. So for any big party in there, they actually just generally already want to run a node, even without incentives, because they want to make sure security-wise they participate in the network. Second is, of course, they get a share of the Bitcoin gas fees, similar to like in Ethereum. And so the more gas fees there are, the more incentives there are to secure the network. Now, this all comes back to how do you incentivize a Bitcoin layer 2, in essence? Why haven't we seen a Bitcoin layer 2 pick up? And that's why the STBTC is a game changer. And let me give you two examples here. Very specific, STBTC is an up-only Bitcoin yield product. Like you stake your Bitcoin and you always end up with more Bitcoin. So, okay, we've recorded this a bit before the actual launch of the podcast, but I assume the yields could be as high as 6 to 50% in essence. It all depends on how much Bitcoin is staked. Now let's assume the Bitcoin yields are 5 to 6%, right? If you are trading Bitcoin on GMX on Arbitrum, now you have the opportunity to increase your baseline profits by 5 to 6% by just using GMX and STBTC. So you can use STBTC, Bitcoin yield bearing on Botanix, and your baseline Bitcoin returns will increase 5 to 6%. Boom, that is a massive pure monetary incentive to move your trading activity over to a Bitcoin layer 2. Second is borrowing against your Bitcoin. The single one thing Bitcoiners don't want to do is sell their Bitcoin. Now, there's a wild range of interest rates you have in the market. You can use centralized companies, you have on-chain, you have Ladin, you have Lava, you pay 10 to 14%. You can go on-chain with Aave, and your interest rate is probably like 3%, right? Now, what if STBTC, yield-bearing Bitcoin, is yielding 5%? Now you can borrow stablecoins against yielding Bitcoin. That is a game changer. Like if your interest rate is 3%, and your yield-bearing Bitcoin STBTC is yielding 5%, you're actually yielding against a negative 2% interest rate. So this is a very hard monetary incentive to move over and borrow on something like a Botanix. And that is basically what will start this flywheel. You basically now have a direct monetary incentives in token form that you can use in applications in the DeFi ecosystem. And that's a differentiator between a user experience and for institutions between like an Arbitrum and a Botanix. So two very clear examples.
So the yield comes from the gas fees paid on Botanix. How how large are these gas fees on average in order to justify an up to 50% yield on STBTC?
The yields are, or the gas fees are more or less the same than Arbitrum in essence. So then it all depends on how much is staked versus transaction activity. Now, as you will see, and if you go to Botanix and you want to stake some Bitcoin, you'll see there is a yield cap. So one of the ways we ensure that there's not someone coming in with $1 billion in Bitcoin that presses the yield to 0.01% is in the initial phases, we will implement a cap. So there's a max amount of Bitcoin stake. Now you can buy STBTC on DEXs. You can actually borrow STBTC against your Bitcoin. So there's other ways you can get STBTC in the Botanix ecosystem, but the overall amount of STBTC is kept, which ensures the higher yields compared to the gas fees.
And if you think about how Bitcoin yield is generated currently, well, first of all, it's not on Bitcoin, right? Most of the on-chain Bitcoin TVL is essentially bridged to Ethereum or other blockchains and, swapped into a stable. It basically, you inherit a lot of trust assumptions from smart contracts, from all of that activity. this is going to be the first ever endogenous source of Bitcoin yield, where it's in Bitcoin on Bitcoin, and you don't necessarily need to bridge to other networks. And that's why it was very important for us to create like a very strong incentive system with this inherently liquid yield-bearing Bitcoin at the base, because over time, the incentive is there for, as Willem mentioned, for all of that liquidity to be denominated in Bitcoin terms and be inherently yielding. So it serves as, the most pristine source of collateral within Bitcoin and also beyond Bitcoin. And it's really interesting because, in all of our user interviews, we've also spoken to, Ethereum, degens, we've spoken to liquid funds. And at the end of the day, they all denominate in Bitcoin. Even though Ethereum is up and, meme coins are down, everyone still denominates in Bitcoin. So it just shows that it is like that eventual destination asset or savings asset for everyone. And we really think that once the market experiences real scalable Bitcoin yields, that's going to be the real turning point of hyper Bitcoinization. It's like that. It's what happened with Ethereum staking, right? Once staking was enabled, it almost became the default of the entire industry. And we expect a similar movement to happen within Bitcoin on Botanix. And we think it's going to really grow Bitcoin, the asset as a whole. And, it's going to be the first step of real world live use cases on Bitcoin. Because to your initial point, it is very important for us to think about the economics of Bitcoin as a protocol, think about filling up some of these mempools, and it's important for us to actually transact with Bitcoin. And so what we are generating, right, with Botanix is transactions for Bitcoin and for the Bitcoin protocol, which also enable better economics in the long run. So it also does serve the original use case of Bitcoin, and we hope it really increases the financialization of Bitcoin as an asset towards that eventual end goal.
Yeah, agreed. I think that that's like the right path to think about where the Bitcoin ecosystem should be headed. I guess I think like one of the things that I kind of struggle to wrap my head around as someone who's really interested in like the larger Bitcoin ecosystem and what people are building on top of Bitcoin is like, what's the catalyst for BitcoinFi, right? Because I think that it's the most mature it's ever been in 2025. Still not very mature, right? Like I think we have a lot of apps that are similar to maybe like Ethereum DeFi, but like a little bit more raw or like less battle tested contracts. We have some stuff on the layer one with ordinals and meta protocols, like a few different similar protocols. But ultimately, I don't think anything's found product market fit.
Agreed.
As far as like Bitcoin L2s or BitcoinFi goes, what do you guys see being the main catalyst that just, helps BitcoinFi catch adoption?
That's the best question. And it's a question that we're obsessed with and think about all day, every day, which is, why hasn't Bitcoin popped off, really? Like, why hasn't Bitcoin season 2 happened? And I think it's basically a combination of everything we've just been describing, which is the right incentives with the right ecosystem. So I think there have been a lot of experiments over the years, and some have proven scale and have found some initial indicators of product market fit. But I think it comes down to having the right incentives with the right ecosystem and the right security and trust model. So the right incentives is STBTC, which is the product that is coming out today, or when this was going to be released, which is going to incentivize Bitcoin liquidity to come in mass towards this yield-bearing liquid Bitcoin standard that is going to be on Botanix. And that's the incentive to actually bridge liquidity to a Bitcoin blockchain. Because otherwise, as Willem mentioned, there is no real additionality for any of these blockchains, right? Aside from the obvious. So that's number one, is getting the right incentives. Number two is getting the right ecosystem together. So we've been working for 2 years to build an ecosystem. We have net new native teams. We have some of the best Ethereum DeFi protocols cross-deploying to us as their only Bitcoin deployment that we've done with no grants, no incentives, no points, no accelerator, no nothing, purely because they see the opportunity for building in Bitcoin on the best Bitcoin blockchain, which is what we like to consider ourselves. So getting the right ecosystem of mission and vision aligned builders really building with us. And that also creates trust, because if you are, using Bitcoin DeFi for the first time, it's important for you to do so on the best possible protocols that you actually trust. Because at the end of the day, it's Bitcoin. People hold retirement in Bitcoin. So it's really, I noticed this myself when I bridged my Bitcoin to Botanix for the first time. I was like, wow, okay, this is real Bitcoin. I want this to be extra, extra, extra safe. And so I think that was really important for us to bring the best possible ecosystem of builders together to really build this new financial ecosystem that runs on Bitcoin. And number 3 is the trust and security model. So as I said, the number one question is, how do you keep my Bitcoin safe? And that is what we tried to address with our decentralization model and the fact that no single party can hold control of your funds. So addressing each of these is what we think is going to kick off this DeFi flywheel. And honestly, longer term, this is going to just unlock new use cases, new user experiences, because I do think user experience is a big theme that we still need to tackle within Bitcoin, within EVM and beyond. And so I think this is just the progenitor of the next wave of what Bitcoin adoption acceleration looks like. And we need to do so in a collaborative way as much as humanly possible. But this is our thesis for what we think is going to unlock Bitcoin, is aligning these 3 components. But we shall see if this is the correct approach.
In essence, I would add to that, very short, the one singular thing that every Bitcoiner wants and everyone who denominates their net worth in Bitcoin is you want more Bitcoin. And this is very clean. It's Bitcoin only, no points, no tokens, up only mechanism in reality and actual real Bitcoin yields. And now you have a massive incentive across the whole ecosystem, across Bitcoin DeFi on Botanix, to always have the highest yields you can find anywhere or across the world, across the whole of crypto. Because if you borrow Bitcoin against yield-bearing Bitcoin, you can now use that anywhere you want. There's already people figuring out strategies. Hey, I can borrow Bitcoin against STBTC, bring it back to the Bitcoin base layer, start using it anywhere else. And now you add up the highest yields you can find anywhere across the crypto ecosystem. And so it will become over time a liquidity black hole as a Bitcoin layer 2. And the only difference is it's because the Bitcoin is the gas fee.
I want to ask a bit about cross-chain interoperability and potential bridging. Are there any plans to create capabilities to bridge from an EVM or another chain to Botanix directly? Also, just within Bitcoin future L2 ecosystem, how hard would it be to bridge between chains rather than going directly through or indirectly through the Bitcoin L1?
So we actually had a Lightning Bridge live on day 1, which is very exciting, which is the OG Bitcoin L2, as I'm sure you guys are very familiar. And we work very closely with the Lightning Labs team. We think payments is very synergistic to the broader financialization of Bitcoin, and it's very, very important part of the overall ecosystem. So we had that live on day 1, and that was very important for us to do. In terms of bridging to other chains, we have Layer 0, Chainlink, CCIP also live, so you can bridge from other chains over to Botanix and to Bitcoin. So I think those are the main avenues we're pursuing. Obviously, interoperability is a very important part of all of this. But yeah, it's also as important as interoperability is. I think it's very important to serve this eventual end goal of building a very endogenous Bitcoin DeFi ecosystem. Because I think sometimes when you create things that are almost too cross-chain, it almost dilutes the original purpose of what we're trying to achieve here in the first place, which is building things in Bitcoin on Bitcoin.
Cool. I also want to ask a bit more about the Spiderchain. Just architecturally, could you run our listeners through that? And also in terms of like nodes that are live right now, who's currently a node?
Absolutely. So we strongly believe in transparency. So we announced our federation a few months ago, our initial federation of 16 global parties. These are optimized. We've chosen them. They have to be existing big companies, and we've optimized them for security. We audited and did security assessments of them. But the most important part that we selected for is global spread over jurisdictions. So we're by far the most censorship resistant. We're spread across the world, across multiple jurisdictions. We as Botanix are in essence no longer in control. We only run one node. If the network does not want to upgrade, it does not want to upgrade. And so it's a proper initial decentralized global federation at this point. In the next stage, for the next 100, the same analysis will be done. We'll optimize for global spread across jurisdictions, for security and audits and experience and the size of the company, of course. Now, how the Spiderchain actually works is that you basically on Bitcoin, you will create a series of different multisigs. These are frost multisigs, so you can change them in size. And every time you make a new multisig with a random set of participants, And so that basically over time gives you full security. Now, in trustless fashion, we use trusted execution environments. So basically, any node operator can only sign a peg out if a peg out proof is valid. So only if on Botanix a peg out is burned, so you burn some Bitcoin, and it is a valid finalized block, that's only when your node operator will be able to sign a peg out, in essence. So it's fairly trustless. Now, trustless never exists. The main security model is decentralization. That's what we go for. Like, you have to believe that this network is decentralized across all these node operators. But the interesting thing is you can run your own node, not participate in the Bitcoin multisig network, but you can run your own node to validate everything that the Federation is doing, like Watchtower style. So yeah, this is the most transparent, most censorship resistant layer 2 with full decentralized sequencers.
Also, on the topic of stable coins, I've received a lot of attention recently, especially from institutions. How do you see stablecoin adoption unraveling both in Bitcoin and on Botanix? And do you see a large opportunity there to increase, DeFi TVL, or do you think that'll mostly just be denominated in Bitcoin within the Bitcoin ecosystem?
Yeah, I think stablecoins have reached huge product market fit. And one of the main reasons, because of Tether, is like if you go in the global world, now anyone in the world, people who are unbanked, people who are banned from the financial system can just send US dollars across from each other very easily. That's one of the main big use cases. The second big use case, I believe, is more applicable to what we're doing at Botanix, is borrowing stablecoins or US dollars against your Bitcoin. This is an absolutely massive market. And like we mentioned before, current interest rates are the best on Aave on-chain. Now, the moment you have yield-bearing Bitcoin and you can borrow stablecoins against your Bitcoin for free, that will create a huge demand in terms of DeFi stablecoins on something like Botanix, and that will drive that stablecoin adoption.
Yeah, I feel like there's a really interesting niche for Bitcoin-backed stablecoins as well. I know like Liquidity, I think, and Alpin are like developing one of those as well. Just because I think that there's a lot of people that like are kind of questioning where yield's going to come from after interest rates come down, and I think people feel really comfortable with Bitcoin-backed stablecoins or gold-backed stablecoins. But yeah, I mean, is that something you guys see yourselves like introducing or partnering with stablecoin issuer to try and create?
So we actually already have a Bitcoin-backed stablecoin that's live in our ecosystem. It's called Palladium, or PUSD. So you can already, once you bridge your Bitcoin over to Botanix, you can mint PUSD today, which is fully Bitcoin backed. And yeah, that is the hero use case that we actually see. So if you think about, a world that actually runs on Bitcoin, right? You have, let's say, a Bitcoin bank, right? Which is kind of similar to like a lending borrowing protocol. And then you have like a Bitcoin stablecoin, which actually can serve as like the more interoperable cash in this Bitcoin backed world. So we're already seeing, projects like Palladium and a few others on the Botanix ecosystem, but we expect this to only expand. But I think the most important piece, in terms of growing a stable coin, is thinking through the utility of the stable coin and the interoperability of it. So I think that's like the number one thing that I know the Palladium team is thinking about, that any Bitcoin-backed stable coin needs to be thinking about, which is what is going to be the eventual utility and creating proper yield systems around this. And that's a really, really interesting problem to solve. I think with a lot of the discourse on stablecoins, there's obvious network effects, right, for the incumbent players like the Circles and the Tethers of the world. And those network effects, I think, grow over time. And so I think it's going to be very important to see the early progenitors within the Bitcoin-backed stables land and see how they opt to grow. But I think at Botanix, our approach is very much to recruit the best teams to come build on us instead of building things ourselves, right? Because we think that's a true, again, very decentralized and finding product market fit more intrinsically instead of being a bit more instead of trying to force a product into the market. And Bitcoin-backed stables, these projects were some of the first that approached us, which we think makes complete sense. And they're already starting to see, early product market fit. People are already minting these stable coins and using them in Artura, which is one of our perp DEXs, for example. So I think we're already starting to see those early network effects begin, but it's very important to compound them and understand how we can expand that utility even more. We think especially within emerging markets, which is where Bitcoin sees the most product market fit, that's where Bitcoin-backed stablecoins can really grow and thrive. Because if you guys, I think a lot of people talk about stablecoins and the stablecoin super cycle, and they think through, okay, yes, let's look to emerging markets as the catch-all solution for trying to find adoption. But in most of these countries, they're using it more as, again, as a store of value or as a hedge against their national currency. And it's very important to, one, put those stablecoins to work, and two, for these folks who are already holding Bitcoin, the next advent is obviously a Bitcoin-backed stablecoin, which is something that they already trust. You can already see early systems of trust in Bitcoin in countries like El Salvador and Bhutan. And we expect that to increase even more, especially as, we become more and more, I guess, anti-competitive in terms of these systems of national currency. So that's what we think about the future of Bitcoin-backed stablecoins. So we're already seeing early product market fit within Botanix, but really expect that to grow, especially within emerging markets use cases.
Yeah, you mentioned a perp DEX on Botanix. Just with the timeline of DeFi's development that Botanix is launching, do you think perp DEXs will be one of the larger use cases on Bitcoin L2s? And you see Bitcoin collateral is providing that liquidity?
Absolutely. So it's funny because people think Bitcoiners don't like to gamble and don't like to degen. They do, just in a very different way. And I think it's very important to segment and categorize that user behavior and understand how that differs from Ethereum or other ecosystems, right? So they actually love speculating on the price of Bitcoin. They love speculating on the price of gold. They love speculating on strategy, right? So actually Artura, which is the perp DEX on Botanix, one of the main markets that they're opening up is strategy, which I think is a really interesting one, and one that I think Bitcoiners that really speaks to Bitcoiners. And so that is one that is one of the very obvious use cases we're seeing within Bitcoin and within Bitcoin scaling. However, I do think that user behavior in general is a little bit different from Ethereum. So perp DEXs are the number one topic du jour in crypto Twitter, in the broader ecosystem. And it is a very important part of the Bitcoiner user journey, but it's as important as having really good DEXs, really good lending borrowing protocols, really good stable coins, to your earlier point. So I think it's a very important component within the overall ecosystem. But from what we've seen with GMX and with Artura, people are very excited to be longing, shorting Bitcoin, the US dollar, gold, these types of more, I would say, TradFi assets is what the best way to think about it.
Gotcha. Sorry, I was just going to add, would you say tokenized equities for perps would be a potential popular asset to trade on something like Botanix?
Absolutely, because at the end of the day, again, I'm very bullish on tokenized equities in terms of, again, serving that original use case of access to equities for those who do not have access to US equities, for example. Tokenized equities serve a very specific pain point there, and being able to, do so on a perp DEX makes a ton of sense. But again, what's really important and why Botanix plays a very interesting role here is that underlying yield-bearing collateral, right? So why would you do this on any other blockchain when you can do it with something that is inherently yield-bearing and in the asset that you trust the most over time? And so that's where the differentiation comes in again.
Yeah, the real game changer is why would you trade on GMX, on Botanix, or any perp DEX? Bitcoin is the most traded asset. If you get 5% Bitcoin yield underlying on your results on your perps, then immediately you'll beat whatever you can do on perps on any other chain. So if you use STBTC to long or short and you're a Bitcoin perp trader, yeah, you should probably consider moving over, because your baseline result will immediately improve in essence.
Awesome. So I know you mentioned a few announcements today. Would love to just go over what the timeline is for Botanix in terms of next 6 months to a year, looking to 2026. What should listeners expect?
Sure. So actually, I think when this gets released, we've released STBTC, which is very exciting, which is cold, hard Bitcoin yield in Bitcoin. and nothing else. We're very, very excited about this because it is the product that we've seen that has the number one product market fit within every single Bitcoin segment that we've spoken to. So that's the number one product that we're launching now. And more exciting, you can now use it, within an actual fully functioning Bitcoin finance ecosystem. So you can create a liquidity pool on one of the DEXs. You can use it as collateral to borrow stables on Dolomite. You can use it to open a position on GMX. You can deposit it into a vault product and earn enhanced yield through a blend. You can mint Palladium using PUSD. So basically it becomes this yield-bearing token that you can use in an actual fully functioning Bitcoin finance ecosystem. And that's what's really exciting, because that's the progenitor of overall Bitcoin finance thesis that we have. So that's what we're releasing today and that we're really, really excited about. As we continue to grow, we obviously are going to be onboarding more very, very interesting applications very soon, including some very exciting stable coins that we'll share when the time is right. What's really, really exciting as well is seeing people that we're speaking to who've never, ever been on chain before coming on chain via Botanix. And that's what really drives us at the end of the day, that additionality, both when it comes to users or when it comes to liquidity and really putting Bitcoin to work. So Willem and I, we spoke to hundreds of Bitcoiners at Bitcoin Vegas. I spoke to an ETF Bitcoiner, spoke to someone who had Bitcoin on Robinhood. And when I explained to them what you can do on Botanix and how you can put it to work, I was like, okay, here's how it works. Here's the deposit address. Here's how you stake. Here's what you do. They're like, oh, okay, I understand this and this makes sense to me. I will actually engage with this. And I think the ability to target that larger group of folks and educate them about self-custody, about the importance of, the importance of, owning your keys and owning your own coins. I think that's something that we also want to really lean into and own as messaging, because that's equally important for, to serve the mission of Bitcoin. So basically, yeah, that's what we're working on for the next few months. We're also going to be expanding the federation, as Willem alluded to, and, continue decentralizing the network, because decentralization will win at the end of the day.
Decentralization will win. Okay, and for listeners who want to learn more about Botanix, what's the best place to go to, other social media or online?
Yes, all the usual suspects. So, Twitter, YouTube, our website. Our website has very comprehensive docs and tutorials in terms of how to get your Bitcoin online and on chain and start doing more with it. So that's probably the best place to start. And honestly, we love feedback. So if you want to DM us with any feedback on any parts of the user experience for you, we would love to have them, because at the end of the day, that is the number one thing that's driving us. So we want to make sure people are able to do cool stuff with Bitcoin.
Awesome. Is there a question that you would want us to ask you?
It's a good question.
Maybe
Go
to
ahead.
follow up on that, maybe not a question, but if you're listening to this episode and you have some Bitcoin and you actually just want to see it go up over a few days, just try it out. You actually see the number of Bitcoin just going up, and it's pure Bitcoin, and you can instantly withdraw back to Bitcoin base layer, instantly put it back, and that's when you'll see, a really game changer. So I would definitely recommend everyone to just give it a spin.
Yeah, the whole team has staked Bitcoin, and it's pretty cool. It's at 30% right now, or actually 50% right now. Obviously, it's going to go down, right? But it's still pretty cool to be earning in Bitcoin. And yeah, it's the first step towards what we think is going to be rethinking through how do you build real DeFi on Bitcoin, and in a way that is not driven by purely short-term incentives, but by really building long-term sustainable incentives that make sense for what Bitcoiners actually care about, which is making more Bitcoin.
Awesome. Thank you guys so much for joining us today. This has been Messari, Fully Diluted.
Thanks so much, guys.
Thank you.